Hello, hello. Happy Friday. Good to see you guys. I taught a class recently to a group of agents about some of the ways that you make money in real estate as an investor. And I thought this might be useful. We generally think of one or two of these, but hopefully you're using all of these to really balance out your real estate portfolio. So, number one, most people think about cash flow, right? Difference between our income and our expenses. So, $1,000 rent less $800 mortgage payment, you've got $200 in cash flow, which is great. But as a long term strategy, it's certainly not the only one. And in a seller's market, there's definitely thinner margins because there's so many people competing for one home or commercial unit. So do keep that in mind. It's fantastic, but not necessarily your only strategy. Number two, appreciation. I think this is the other one that is probably most commonly thought of. And historically, over time, we have about a 3.5 to 5% appreciation rate over the last 40, 45 years of data that we have. So fantastic appreciation. Number three, though, I hope you're thinking about this. As investors, rental appreciation is significant, right? So what is renting for, let's say, $2,000 today is likely going to rent for quite a bit more in the future. Statistically speaking, I love numbers. As we've seen markets undulate, right? So buyer seller market going up and down, rental appreciation has actually held steady and increased at about a 2% rate in the Phoenix metro over the last, I think it's 30 years of data. So rental rates continue to increase year over year. Now this year it's been 27.5%. That's not normal, but it does increase, right? So keep that in mind and raise your rents. Love on your tenants if that's what you want to do, but raise your rents over time. Number four, a lot of people are aware of this one, I hope, forced equity. So making improvements on the property, whether that's adding an income source or just updating, flipping, adding a guest house. There's lots of ways to force equity in a property and increase its value. HGTV has made this super popular, so you're probably aware, but forced equity. Number five, have you run your numbers? Are you aware of your amortization schedule and what that looks like for you? So loan pay down is incredibly useful, right? So you have appreciation, you have increase in equity from your loan pay down, and then hopefully you have a rental appreciation as well. So those are fantastic. But number six is the one I'm really hoping that you're going to talk to your accountants about, depreciation. So as an asset class, this is a very unique structure. From a tax basis, there's this term called depreciation. I'm not an accountant, so there's my disclaimer. Please talk to your accountant. But for us, if you're a long-term buy and hold investor like me, you have the opportunity to depreciate your asset over its useful life. And let's say that's 27 and a half years. So as your equity position, your appreciation, all these things are going up, your taxable basis is helping offset a lot of that increase. That's my non-accountant understanding of it. So it's really useful. It's a very fantastic way to utilize kind of the fullness of this asset class. So if you have any questions, let me know. But I hope that helps. I hope you got all six. We'll talk to you soon. Have a great day.